All right, good morning, everybody. Hope everyone's doing well. Let's get into some of the things we are going to discuss. Hope everybody had a fabulous holiday. And yeah, we're going into the last stretch of the year. So obviously, you want to keep in mind that things may lack clarity, right? They may, because think about it. If you were a billionaire, right, and you had all this money, and the holidays were coming around, do you think you'd be in the market, right? Like tediously trying to find positions, right? So, although there are some that will do that, undeniably, right? Um, there's a lot of money that's on the sidelines waiting for next year. And then we also have, I believe, the last Fed meeting before the new administration comes. So that's going to potentially be interesting. And another reason why people, the big players, can consider waiting, and sideline, take profits with what they've accumulated, this whole year. And so expect that conditions may be a little less clear. Doesn't mean there won't be opportunities. It's the expectation setting that a lot of times gets people, and because like they'll go into an environment expecting something to happen like it was in like the summer, for example, or the beginning of the year, right, or through this election, right? How volatile things have been. If you go in with the wrong expectation, not understanding the conditions and having conditional awareness, situational awareness, a lot of times you can get bit just because of that. On top of all the other landmines that lay ahead of us as we engage the markets as day traders or swing traders or any other type of trader, right? But yeah, so far, I hope for the last couple of weeks you guys have gotten a lot of value from these videos, breaking down the whole bias and narrative process from that higher time frame. I hope you guys have seen, like last week, I gave some qualifiers in terms of levels that would either justify a downside move in the indices, or what would happen if, or on the bonds and yields as well. I give some areas that if they get taken, price would do one thing or another. And we're going to dive into a lot of those intricacies and see how things played out and how the things that I shared last week and all the other weeks stack on top of each other and made the rally and, say, the bonds make sense and trustworthy, right? But yeah, before we get there, obviously we got to look at the economic calendar. Like I said, you can't disregard the fact that we are in the end of the year. We just finished a month, right? An old month going into a new month. We have a lot of holidays upon us. We had a holiday that just passed. So these are all things you, again, want to consider in terms of conditional and situational awareness and your expectation setting. So it's just like having like a car. If you get onto the freeway, you're not going to go 5 miles an hour because you understand what the situation will bring. Same with you're driving down a residential area, right? You're not going to go 50 miles an hour just because you feel like it. There's situations that you have to act differently when you're involved in them, right? Or when you're experiencing them. So yeah, again, like I said, we have a Fed meeting. We have non-farm payroll, so NFP protocol is in play as well. For those of you that don't know, NFP protocol is generally, for me at least, you cut your amount of trades down. If you take 2 trades a day or 3 trades a day, drop it to 1 trade. And if you take 2 losses in the week, like early on, don't trade the rest of the week. Because the early end of the week is generally going to be the time when opportunities may unfold. Doesn't mean that there won't be opportunities that you potentially, could have taken on some risk to participate in, and possibly be profitable. It's just the elevated risk environment is not worth it, at least for me, right? Of course, this is my opinion, not financial advice, but having this type of perspective and considering some of the things that I share on a regular basis have served me very well. And a lot of my private students have also seen the fruits of that. And then some of you too, in my YouTube family, right? But yeah, so obviously there's landmines. Like I said, we have a Fed meeting and NFP, so we're going to want to tread lightly and not overextend ourselves and then damage the end of this year, especially if you've had a good year. So you want to take things very, very slowly. Okay? 1 trade max per day. If you take 2 trades and they're back-to-back losses, you stop for the week. Okay? And your last trading day that has, reasonable probability that something may occur is up until Wednesday AM session. Right? Beyond that, if you end up trying to engage and you're trying to follow the rules that ICT teaches, if you trade beyond that, you're breaking the rules, right? If you trade outside of your model, it's very hard for you to get accurate data to analyze. Like, is your model working or not? Do these rules work or not? Are these things beneficial or not? You can't get a justifiable data set of experience that can be reliable and give you actual answers to those types of questions. Is it working out? Am I going to be effective with this model? You can't determine that. Or am I going to be effective in a particular environment? You can't determine that stuff accurately if you're doing 100 things every other day. Like a breaker, YouTube model, OTE, trading during NFP, not trading during NFP. If you have things so scrambled and unorganized, trying to do way too many things, that's where a lot of ICT traders and traders in general end up quitting, because you can't have accurate data to improve upon. You can't go to a job and work everybody's job and expect to be a master at your particular role if you're doing all these other things, right? It's the same perspective you want to have with trading. That's why ICT says what he says and pushes for, everyone to focus on one model at a time. Eventually, you may add on to it, but again, you don't have to. You just need one weapon that you can masterfully wield in this financial battlefield. All right? So yeah, keep tabs on the news and keep tabs on the times. We'll go on to the bonds and yields now. Probably look at the bonds first. So last week, if you recall, I was mentioning that with this dropping so aggressively, my interest would have been to see if this fair value gap would hold, this monthly volume imbalance would hold, and see if the response off this wick would not be respected. And if that did end up bouncing off of it, this wick here, and breaking through these levels, my target was very clearly laid out that, if that's the thing that takes place, it'd be this high, or to the extreme, which was this fair value gap. And obviously it hit that. So last week's video, coupled with what we're looking at today, kind of shows you the validation invalidation process that I try to teach as well on a weekly basis, right? The 3 PD arrays, certain levels, watching them hold or not, allows us to make specific decisions. And you could see that here. Since it broke above that, it stayed above that, so the target interest was up here. Logically, very logically. Does this change the overall downtrend from bearish to bullish? No. Now, if we start blasting through this and we continue, we could start to seek upside targets, and then that only changes if price ends up doing an aggressive smash lower, breaking multiple PD arrays, getting back below this weekly fair value gap, and then in which case we would then turn our attention to here. For now, this is definitely potentially a retracement, right? Just to tap into this and then possibly go lower, given the fact that this is all still bearish. It's not bullish. There's nothing saying, oh, we're switching sentiment now, right? Now, if we start blasting through and, showing no like uh, rejection at all, and it just keeps sliding, and then the yields end up falling aggressively, then obviously some stuff may be changing, right? Then there could be a pretty strong argument that things may be changing, right? But you don't ever bounce back and forth like buys to sells, bullish to bearish, just because you see something like this take place, right? Higher time frame bias and narrative. It's very important for everyone to realize that it takes time for sentiment to shift on those time frames. We get so caught up and used to the fast pace on the 1 minute and other lower time frames that we take that mindset and then we apply it to the higher time frame, and then we get screwed over, and then we start getting confused, and it's just our focus is out of alignment with reality, time frame to time frame, because everything works within each other, but then there's different characteristics that you have to be aware of. The lower time frame is obviously faster, so if you come up with a narrative on that lower time frame, you want to make sure that it's justified in that higher time frame as well, which again, the higher time frame takes a little bit of time to deliver. So because we're inside this weekly fair value gap here, price has disrespected all these levels that I wanted to see if it was going to truly show me that it was going to be extremely heavy. I'd like to see us respond lower here for me to then get back in line with potential sell side, right? We also have this order block, right? We have all these new week opening gaps that are layered together, which is part of the reason why price was being held in this area here, right? If it stays above this weekly fair value gap, we have buy side targets. What is the most obvious target here if we were going to say, okay, price is going to go higher, right? What is the most obvious target for a potential draw on liquidity next week if we're looking at this time frame? Well, if you consider this list of liquidity pools that I've mentioned before, which is previous month's high, previous month's low, previous week's high and low, previous day high and lows, session high and lows, and you just consider those things, when you look at this time frame, the most obvious near-term potential objective would be this weekly high here, or even the current weekly high. That'll probably come before this high is taken if we do choose to stay above this weekly fair value gap, right? So just that little tip right there in terms of liquidity identification. This may seem very simple, but then again, not everything has to be overcomplicated. A lot of times these are the types of levels that will be attacked and part of a narrative or part of the context that drives price to a particular or inside of a particular narrative. Okay. So yeah, I hope that makes sense, because it's one of those very simple things that most people overlook because they want everything to be super complicated so they can make themselves feel like they're doing more than they really are, or they know more than they really do. So we've hit this fair value gap. I'm simply going into this next week looking to see how price is going to utilize this. If it breaks above it and gets outside of this fair value gap, I am going to expect that this is going to act as support to then reach up into this, maybe even target this volume imbalance up here if this all stays intact. Okay. And then obviously there might be some type of new week opening gap in here. You see how they're uneven? So I'm assuming that there's some type of new week opening gap, some type of other lower time frame. Yeah, see? New week opening gap in here. Right here and right here. So that's why this looks a little disjointed from this time frame. If you go down to the daily, you get a better picture. There's new week opening gaps in there. It's from October. New week opening gaps are utilized from the last 60 days. And sometimes, you could go even further. I don't go more than 3 months, to be honest. So we're going into December, October, right? That's pretty much in that range, because price will use them when price comes around there. That's, you know, just like it used all this. Look at how the new week opening gaps kept price in this range here, right? Another key factor before we move on from this asset, I want you guys to think about, as you walk forward, when you see the bonds and yields consolidating, when they're stuck, when it seems like they're in the mud and they can't move, and say that's happening at a time where you're having trouble identifying a narrative with clarity on the indices or the DXY, you need to understand that, like I always say, this dictates and has a heavy impact on the assets, in this case, on the foreign currencies and the indices. This specific asset, the bonds, impacts those, right? So if it's stuck in the mud, and this is a heavy influence over those other markets, there's a beautiful explanation as far as why clarity is lacking and why you're having a little bit of trouble at a particular time, or not seeing price move quickly at all, right? Or in much of a capacity, right? So that's another one of those little key gems to consider as you walk forward and study how these markets operate together. Okay. So yeah, I wouldn't be surprised, given the fact that this has went up, if this does want to go higher and continue. We do have a little bit more of this gap here that it may punch up into, and depending on how price is going to give us like either a response higher using this as support, or response lower using it as resistance, that's going to determine what my assumption is going to be heading into the end of this next month. Remember, Power 3, we're inside of the new month. We just started it. So consider the fact that, if this is going to go higher, it wouldn't be surprising for them to want to drop price early on, get down to some form of a PD array below. In this case, we have a weekly bullish order block here that it may reach down into, right? And so going back to what I said about the 3 PDA rule, just so you guys can see how it operates on the fly, like as you move and see price deliver. We have this PD array here. We have this order block here. We have a bunch of new week opening gaps in here. We have a volume imbalance in here. Right, so if price just smashes through the order block, the midpoint, stays below this fair value gap, breaks through these this volume imbalance here and all these new week opening gaps, if it's showcasing that and showing no response to the buy side off of these levels, there's no reason to push buys just because it ran, right? Just because you see this really large candle. Multiple PD arrays getting violated just by viewing this time frame can help you determine what side of the market is most likely going to be favored. In this case, right, it did take sell side, so it's not unreasonable for them to retrace back to an opposing PD array and then maybe continue their response lower. But look, if it rejects from here, comes down into this order block, and then we see a large range expansion that breaks outside of this weekly fair value gap, we obviously now have the catalyst to trust bullish delivery moving forward because of all these factors layering on top of each other. But again, this takes a little bit of time to deliver. So that's going back to what I said earlier. You're going to want to have patience. You don't want to flip-flop, right? We're identifying what it's going to do coming out of this consolidation off this low here that was taken, going into a new month. Prices reached into this higher time frame PD array. And so now we're going to watch for the response, whether it's going to retrace back. If it does retrace back, considering Power 3, how does it utilize this order block? How does it utilize this volume imbalance and new week opening gaps, right? Does it stay above this weekly fair value gap, right, which is over here? Does it get back above after it responds from this order block? Does it get back above this weekly fair value gap and use it as support, right? All of those indications I just mentioned there would help us determine that, okay, bearishness is uninteresting right now. So if I sell and that's the environment, if I'm looking to find a short, on the lower time frame, for example, and those are the conditions we're analyzing, shorts would be half the risk if taken at all, right? Most of the weight behind your engagements in that case would be pushed towards buy side. And that doesn't mean over trading because you think it's going to go higher and bullishness is being favored, right? So there's a lot of nuances in mindset, right? And then there's also a lot of key little gems that help you navigate price and start building towards trust, right? And then obviously with trust comes clarity, right? And then with those two things together, with the organized process and risk management, you can end up having the opportunity to potentially be profitable, right? So very key elements. So yeah, I hope all this stuff makes sense so far. So that's what I'm looking at. I want to see how this weekly fair value gap's either going to hold price as support and rally up, maybe even get up into this fair value gap, maybe these consecutive up candles, which is a bearish order block. We have this volume imbalance, like I mentioned here. We have volume imbalances in here from that daily chart I just showed. So we have a decent amount of context, different previous day's highs. We have a fair value gap up here that's right above that volume imbalance I shared. So again, if price is broken out here, it's taken out sell side. If this is going to be trusted as a potential shift in market structure, right, changing from bearish to bullish, maybe even eventually turning to a market structure break, it's going to have to stay above here so I can verify that. Otherwise, we still run the risk, given the fact that it's still a downtrend, we still run the risk of it trying to attack some form of sell side, right? Because if you look at the weekly chart, you can make an argument that this is just retracing to go lower. But if it breaks back above this fair value gap and stays above that, then we can then reasonably start to trust potential buy side targets. Maybe this wick also, right? The wick quadrants, those are also all targets that could be laid out if it does favor staying above this weekly fair value gap, right? So we have our validation for what we want to see for price to go higher. And then, like I said, if price breaks through here, starts smashing through all this stuff with no resistance at all, just keeps jamming lower, then we know for a fact that these lows will probably be targeted, and then maybe even eventually this low here, and then right, so on and so forth, right? But for now, going into the new month, going into this new week, which is NFP week, we're proceeding with caution given holidays, all these different things that are surrounding us in our environment that could potentially act as landmines if we're not careful and acting as a professional in the marketplace, like being able to view these things and controlling ourselves and our expectations. Okay, so, but yeah, do you guys have any questions before I move on to the yields? I hope that makes sense in terms of what I'm looking for on the bonds, and I hope you guys remember why this market's so important. Again, if at any moment you guys have questions, interrupt me, hit me with them. I have no problem pausing and coming back to whatever I'm talking about in that moment. Because again, this isn't for me. These videos are not for me. They're for you guys. I'm trying to get everybody that I can, or anyone that's interested in listening to what I have to say about this stuff. I want to get you guys the information that has helped me and many of my private community students. So yeah, moving along, we'll go to the yields. So again, the bonds dictate where the currencies and the indices will go generally. They have a heavy influence, and vice versa. If you go to the yields, that dictates where the DXY generally wants to go. So with that being the case, we saw that this market may want to rally up. All right, one thing I did forget to look at before we move on. So we have all three of these. I like to double check and see if there's any SMT anywhere. All right, so we don't see any SMT here. No SMT there. Let's see, was there SMT at the lows? So yeah, there's no SMT that had an impact for the bonds. Okay, so yeah, like I said, going on to the yields, if we think that the bonds are going to go higher and we want to see that take place, then we have to see this do the opposite. So just like how the bonds, just like how I wanted to, or we're walking into this new week trying to see if the bonds will hold at this fair value gap, or if they'll just reject and stay below and start smashing down, using this as just a retracement. depending on what happens there, um, obviously we're going to want to see this do the opposite. So if this holds in this weekly fair value gap and goes higher, then we're going to want to see this weekly fair value gap hold as well, and then reject this, pushing this lower. And that would then drag the DXY lower, and then obviously potentially have an influence pushing the indices higher. Okay, all these things, again, they all couple together. It's not just about what one market does, it's about what all the markets do and how they all impact each other at the same time, so you can verify specific things on top of all the other things that we discuss in terms of important aspects of our analysis. Right, so we do have this as an order block potentially. So if price was to open, retrace back, maybe pull into this, we may see this get used as something important, right? This volume imbalance on top of this bearish order block. So if it's not unreasonable if price opens up, given power 3, for price to want to open, rally up to start the week, right? And then potentially reach into this area to then instigate the downside move, if that is what's going to be favored. I do like the fact that I see this. This is a very, very clean equal low here. And if this continues and price shows resistance inside these levels and doesn't really show any support or engagement to the upside for the yields here, then we'll most likely see this continue. And I would not be surprised if this ends up being the overall narrative, right, for like the next week or so, maybe even for the whole of December, because that would then pull the DXY lower, and then we would like to potentially see this run higher. And if that's the case, that's also justified by seasonal tendencies. They call it the Christmas rally, right? That's why a lot of times if you look at the past like 10 years, you'll see how the stocks, right, the stock market as a whole and indexes, they like to rally during the end of the year because there's a lot of commerce happening, lots of transactions going on, and it's just seasonally likes to go higher. So if this does what I just mentioned and stays above this weekly fair value gap, and then this stays pushing lower, showing little respect to these downside objectives or PD arrays, that again technically justifies fundamentally with seasonal tendencies. And then we would just continue to observe intermarket relationships to follow that trust as well. And we have a pretty strong understanding and a strong story to build behind why we trust a particular direction over another. In this case, potentially bullish indices continuing, if all this stays the same as it looks. So yeah, I'm going into this new month, or let's just start with this new week, with the expectation of this potentially staying above this weekly fair value gap. Maybe it opens, drops lower, does whatever work it wants, and then goes higher. And then the yields, I would like to see do the opposing view, maybe open up, rally up into this weekly order block, into the little volume imbalance I showed there. Right here, right? Maybe it breaks through that. It's already below it. Maybe it respects that, doesn't even get up to the order block. But my anticipation is I want to see this go lower if we're going to see the bonds continue to go higher and respect this level here. And again, that would make my interest potentially favor higher indices, lower DXY. And then, of course, that's, like I said, in line with the seasonal tendency. That's bullish for the indices, bearish for the DXY. All right, so yeah, I hope all that makes sense too. All right, so if you guys have any questions, let me know. If not, I hope you guys have continued to get value the last couple of weeks and are starting to see some improvements. But yeah, so going into the DXY now, given what we just observed, and our layering analysis for top-down analysis, we can see how price in the DXY reached up into the monthly fair value gap that I pointed out well ahead of time a couple weeks ago, live on a Sunday call, right? Price ended up rallying all the way up there. Before it got there, I called again that it was probably going to get up there, and then it finally reached into it and smacked it. Right when it smacked it, rejected off. Now, what is it reaching for given the fact that it hit the higher time frame PD array? Why is it justified that this dropped right after it hit that higher time frame PD array? Well, this is a beautiful example also of higher time frame PD arrays getting hit and the response that comes as a result of those higher time frames being met. See, a lot of people want to learn how to catch these large range opportunities. Some people aren't satisfied with 5-10 points for whatever reason. And some people, some traders just really want that understanding of how do I anticipate the large ranges, right? Well, a key aspect of that is waiting for price to hit higher time frame PD arrays. Because when higher time frame arrays are hit, or higher time frame liquidity pools are met, a lot of times you'll see these large ranges. Or if price is very close to a particular liquidity pool, like say this one, for example, when we were right here, because it was so close, they ended up smashing quickly to get above that, which was also coupled with the monthly fair value gap I mentioned. Right, so that's another way to anticipate large range moves, right? And then, of course, ICT also mentioned small ranges lead to large ranges. And then after you get a large range, you can generally anticipate a small range. And it fluctuates back and forth within that context. But obviously, you got to consider other factors like PD arrays. What are the other markets doing? What day of the week is it, right? What day of the month is it? Consider power of 3 on that weekly and monthly range, right? All those things can justify when a large range is potentially going to take place or when a small range is going to take place, right? Like ahead of news events, FOMC, NFP, rate announcements, Fed speeches, holidays, all that stuff can, reasonably showcase lower volatility ahead of those events, and then pick up after it ends up going through that event, right? So these are all very, very important things, right? But yeah, so since prices hit this monthly fair value gap and we've rejected off of that, we are definitely bullish still. What changes my mind? Well, we got to go back to the thing that I repeatedly harp on, which is the 3 PDA rule, right? So if let me take this off a little bit. So we got an order block here. We have a fair value gap here. If we go to, some upper time frames, let's see if there's anything else that we can pull out of that. So I would not question things continuing to go higher unless we show that it wants to smash through this fair value gap here, maybe get below some of these previous fair value gaps. Definitely if we get down below this, my attention to the buy side gets thrown straight out the window. Okay? We have hit this monthly fair value gap. There is some room for us to continue going higher. But again, we're going to have to really see what's going to happen with the yields. Okay? The yields, again, dictate or have a heavy influence over what the DXY is allowed to do. Because the yields have dumped off, right? And we did talk about earlier how there is a potential for it to continue to dump off and then see the bonds rally as a result. Because that's the case, this run above these highs into this monthly fair value gap may have been the catalyst to set up buy stops being triggered for them to then drop lower and then maybe come out and try to finish off this stuff in a more long-term capacity. But again, until something's proven that that is the case, right? That being, in my opinion, this is my last line in the sand for me to trust DXY having any strength, especially with the yields dropping, which again, heavily influence what the DXY is going to do, right? So unless this breaks down here, at least in this chart with what we're seeing here, I'm not going to try to push against this run higher until it's proven otherwise. We have things that are layered on top of it showing us that there may be interest in this going lower. But again, although we have outside markets that justify, outside fundamentals, outside resources that may be showing us that something may change or favor a particular direction, we have to start seeing things in that specific chart, that chart being this DXY chart, justify those outside pieces of evidence, right? Or those other outside resources for us to, go with the particular narrative those outside sources are showing. Okay, so in this case, this looks bullish. We've taken out buy stops, it's retraced. So we think of the 3 PDA rule to justify and analyze what to anticipate, right? So we got to see, how does a new week open up, right? What happens after NFP? Because that'll probably be a heavy impact as far as where the month will end up going. I had someone tell me recently, a couple months ago, one of my students in my private community, he was talking about how he was looking to analyze what role NFP has in the monthly range, right? And whether the NFP is used as the potential Judas swing or manipulation inside of each monthly range, which was very intriguing. And I've come to find out over the last couple of months since I was told that is in fact a valid statement, like a valid study to participate in, because like from these higher time frames, the news events act like macros, right? So if you think about things in terms of like the time and power 3 and how everything is fractal, and similar elements are on every time frame, you can start to piece that together and see how that would make sense. And then if you go and study that, like I have the last couple months, because when my student told me that, it was really intriguing. If you go and do that study, you'll be pretty fascinated. It's some of these little nuances, these small details that really pay off in the long run, and really start to get you to understand deeply what you're doing, and how you can properly navigate this stuff. You know what I mean? It's just a fascinating study. So I definitely recommend you guys go and check out that type of study. Look at how NFP and all these other red folder news events, how they operate within that monthly range, and see the impact that has, and how you can move forward and use it as an anticipatory skill set by having the knowledge of that. You know what I mean? So yeah, pretty much like I said, I want to see this hold. If it doesn't hold, then we smash through. That's a first indication that's going to drop and possibly reach down here, especially if the yields do continue to drag this by the hair and go lower. If it does respect it and stay above that, smashes through this order block's midpoint, then obviously it's very obvious that the targets are going to be buy side. It's going to be this wick, break that down to quadrants. We can find a lot of targets in that way. We have this previous week's high. So, and then of course the final high of the fair value gap there that I feel like is going to be potentially impactful if price chooses to hold at these levels and go higher, like I mentioned, could be the case. All right, so I hope that makes sense, and we'll see whether this can be justified as a bearish order block, or again, if it breaks through the midpoint of that, because it should not come back to the midpoint of that if it is going to go lower. Because if you take this from this high to that low, you drag that out, the midpoint, if this is going to be an order block, we should not break through that midpoint, because it should act as a balanced price range. Okay, so if it is going to be respected to go lower, it has to stay below that midpoint of that order block I mentioned on the weekly chart. If it does not do that and it breaks through and doesn't act as a balanced price range, because that's generally what order blocks really are at the end of the day, then obviously we'll continue to reach for the buy side, as I just mentioned. Right? So going into the new week, going into this new month, it's obviously a waiting game. We got to observe some things, but as you can see, there's a lot of things we can pay attention to justify or negate or allow for flexibility as we walk forward. All right, so yeah, I hope that makes sense. Again, I'm favoring going into this week. I'd like to favor this going higher, continue to hold. But then again, that may be disrespected and the downside may be validated because of the yields continuing to drop, if that is the case as we walk forward. Right? So yeah, it's pretty much what I have for the DXY. Let's see what else. See, and you can also consider this, like I mentioned, as an order block, right? The up candles, open price. But you can also look at this as a potential bearish breaker. All right, so keep that in mind as well. So definitely, if it breaks through that, right, the breaker area I have labeled here, maybe it breaks through this fair value gap in here, all of that would just come back to justify that higher time frame moving higher, right? But again, if it stays below those levels, we now have a very structured, like laid out framework in terms of validation, invalidation levels. So either way, whatever it chooses to do, we're able to be flexible and adjust to it and take advantage of whatever it chooses to operate within. And, you know, you want to go into each month, the start of the month, very flexible. You want to go into the start of each week, very flexible, keeping in mind what that higher time frame is showing you. The lower time frame at the start of the week does not matter at all. Who cares what the 1 minute's doing on Sunday? Who cares what the 1 minute's doing even on Mondays a lot of times? Because a lot of times Sunday and Monday creates manipulation and consolidation. Tuesday, Wednesday, Thursday, where the lion's portion of weekly range delivery happens. And then, you know, Thursday, Friday, depending on if it hits a higher time frame PD array off of a one-sided condition from the, you know, previous week, you know, that would determine whether it's going to give us a rejection back into the weekly range as a weekly reversal, right? Pulling back into the weekly range. Okay, so again, I hope all this stuff makes sense. We're watching for these levels to hold. If it's going to be bearish, we want to observe what the weekly fair value gap is going to do. Is it going to push price higher? Then we can justify buy side, or is it going to push price lower? Then we could start to justify, you know, more sell side targets, right? If it is going to go lower, if it does prove that, then obviously we look for previous day's low, 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 fair value gap, previous day's low. In this case, previous week's low here, previous week's low here. So those levels would definitely be interesting if it does choose to stay below this weekly fair value gap and this weekly bearish order block, and then this 2-day breaker as well. So all those levels need to hold for us to go lower. If they're violated, we go higher. Okay. So again, I hope I made that as clear as possible, and I hope you kind of see some of the validation, invalidation principles as well. But now we're going to move on to the NASDAQ. All right. So with that being said, with all that stuff behind us, right, we can see looks like we're still favoring bullishness, right? Price, all this did was come off this aggressive election move higher, retraced back to a discount PD array below equilibrium from this low to that high. Optimal trade entry. Here's a bullish breaker that was respected as well. Weekly bullish order block. You can start to see a lot of things converging together and justifying the reason as far as why this has went higher, right? We'll see if that's going to continue. If the DXY does hold lower and the yields hold lower, like we just mentioned, could be a possibility. This will then justify buy side being delivered, especially if the bonds continue to show us that bullishness is favored by staying above this weekly fair value gap and some of the other levels that may hold and push price higher, right? And then obviously if the bonds want to go higher, they're probably going to reach for the area I mentioned here. We also have a fair value gap in previous day's highs. And then if that is the case, then we'll end up seeing this get above this order block, retrace back into it. My line in the sand for bullishness at that point would be based on us determining whether it's going to stay above these fair value gaps here. the midpoint of this order block, the low here, because this is now a swing low, if it was to reject from here and break down below this, my eyes go directly to here. Okay, and then obviously all these wicks down here as well. The lowest wick here, break that into quadrants, there's different targets there as you push lower if price was to do that. Same goes for when price wants to go higher, right? We're going to continue to seek previous day's highs, previous week's highs, take large wicks, break them down into quadrants, use them as targeting, just to have a even larger pool of targets, so we don't feel like we don't have anything to reach for, because we do. There's a vast list of targets, and it's a very target rich environment that we operate within as traders. You just have to know what you're doing and what targets are likely to be utilized and which ones are less likely, which is kind of part of the process here when we're doing these live calls, because identify a lot of different things. So here's the November high as well. I believe that's the November high. Wait a minute. Actually, yeah, it's a weekly high. My bad. I put the wrong annotation there. So this is the previous week's high, previous week's low. You could see how, if it stays inside those two extremes, that's going to be called an inside week, right? If it's going to consolidate, it'll probably, stay inside that, or maybe run both of them and come back to the middle. We have a new week opening gap here, new week opening gap here, new week opening gap here, here, and then all these down here. We don't have to worry about these. We do see where we came from. We came off of this weekly bullish order block. It's a daily bullish break or two. And then we also have these wicks that have been respected. You can see the delivery. It's visually pleasing to see how specific levels that are supposed to hold this support, if it is going to be bullish, are in fact clearly holding. The down wick here, right? The midpoint couldn't even get violated. The fair value gap here being beautifully respected. The midpoint, right? Price is closing above it, getting right back above that one. Now we're inside of this fair value gap up here, and we're above a bullish order block. So we'll see how this behaves. If it gets above that, I expect it to not break past the midpoint of this, because like I mentioned earlier, order blocks should act as balanced price ranges, right? If it is an order block that's valid, the midpoint shouldn't be violated because it is a balanced price range. And in balanced price range theory, the ICT teaches, the midpoint of that balanced price range should not be violated. Hence, the rules to an order block. Right? Massive gem there that many people have no idea about. They've never learned about that. But that's a fact. And that's, one of those supercharged piece of information that, you'll be pretty amazed walking forward if you did understand what I just said, and you go into the markets next week and beyond, you're going to be amazed. It's one of those things that it definitely changes things. But yeah, so we'll continue to see how all these things behave, if it's going to respect our opinion. I believe that we should be able to break to the buy side if we do get above this, especially if the bonds continue to go higher, yields continue to go lower. That should then drag the DXY lower, keep us below this weekly fair value gap, right? Definitely not break above the midpoint of this, because remember, this is a weekly bearish order block. And if it is a valid bearish order block, the midpoint shouldn't be disrespected. Why? Because it should act as a balanced price range and push price lower if it is a valid order block, right, on that weekly time frame. And then again, if that takes place and this does drag lower, like I mentioned, this should get above this order block, and we should be able to seek buy-side delivery fairly simply. And if that is all violated and chooses to not respond to that, or we can't see that picture playing out, this is my last line in the sand for bullish interest. If we break down below this, because then my eye dramatically will go to trendline liquidity, all these previous days lows, this low specifically because it's a weekly low. And then obviously we have a fair value gap down here, but that's kind of too far in the future for us to to worry about. We have to worry about this current weekly range, this previous weekly range, the most near-term liquidity that we can navigate, and it's also like a really repetitive process of liquidity navigation is previous week's high and low. All the liquidity inside that range, right? Even if we're going to take out the high up here or if we're going to take the low out here, if the next week is going to be bullish, it has to take that in some capacity. So automatically we can take that and use it as targeting and framework, right? And a narrative inside of what, may end up being an attack above the monthly high here or an attack on the monthly low. Before those extremes get taken, it's going to have to be dealing with these inner extremes and the more near-term extremes. And again, I hope that liquidity list I gave earlier gets committed to memory for you guys. Just mention it one more time before we close out this call. I'll mention it in a second, actually. Let's look at all three indices together and get a little picture real fast. So we got a bullish order block here. Yet another reason that we may see continued buy side. We do see price responded off of this bullish order block. We'll see how it wants to behave and get above this. We do have SMT we got to pay attention to. That may instigate a near-term retracement to then set up the buy side. Especially if DXY falls and the yields fall, this SMT bearish would not be trusted if that's the case. Okay. And again, we have this order block here as well. We have volume imbalance. Price may reject back. Everything always comes out perfectly. Damn right, Tony. And the reason you can say that, which I'm super grateful for, you being able to say that, is because you're here every week, and I'm very appreciative of you being here every week. And I hope that you're seeing the things that we talk about. They're seriously powerful. It's extremely powerful, and it helps you gain clarity, and it makes it so you can have the opportunity to trust the things you're doing, because that is so important for people to continue to trade, not be discouraged, just to be able to see it play out, even if you're not making any money. If you're able to map it out like we do every week for the last couple of months, and then you see it play out, it gives you that much more ability to stay motivated. And right now, for all of you guys that are on this call right now that can hear me talk, stay motivated in this time. We are moving into some of the most incredible economic times ahead of us. It's going to be amazing what takes place, not only for America, but across the globe. Right? So keep the faith. Keep spending time with people that know what the hell they're doing. I like to think that I know what I'm doing. I kind of have been showcasing that I know for 3.5 years now, live in front of people. Just keep your focus on the right things. Stay positive, stay focused, get around people that know what the hell they're doing, believe in yourself, and I'm telling you, you're going to see some amazing opportunities laid upon you. And I'm going to do my very best, even for those of you that are just on my YouTube family, to get you guys as much critical information that is useful and very easily applicable so you can start seeing results. If not in monetarily right away, at least in clarity. Because clarity moves you one more step closer to profitability, And again, clarity is the goal. Yeah, I'm trading futures, and I had a life-changing week last week. It's only the beginning. Dude, I'm so freaking proud of you, Tony. I'm so grateful to hear that. I'm glad that you've allowed me to play a small role in that. You come and listen to some of the things that I say, and obviously you need to take all the credit. Nobody, not even ICT, could take the credit for you having a life-changing week or, many more to come. It's you, because you're taking the risk, you're applying yourself, you're following the rules, you're staying disciplined. Nobody can take that credit, So I'm grateful that I was able to play some small role, as ICT has as well, I'm assuming, in your journey. And I keep me updated, bro. If you follow me on Instagram, definitely shoot me a DM and keep me updated with your story and how things go. And like I always say, I'm here to help you guys. If you need anything, let me know. I'm always open to going back and forth. And if you guys support me, I support you. I do this for a living. I'm a full-time trader, been that way for literally the past 3.5 years. So, it's very eye-opening, a lot of the things that I've discovered about the realities of trading. And I've faced a lot of challenges that you guys have faced. And I'm not perfect. I have my up days, my down days. I don't win every trade, but I do have a very high win percentage. And it only works if I follow the rules. And it's going to be the same for you guys. All right? And I'm going to do my best to get you guys any value that I can provide that can help you move forward as well. But yeah, Tony, great job, bro. It's amazing. Let's maybe talk about that in the DM later. You can give me some further details about how that went. I'd love to hear your story and some of the things you're able to accomplish this previous week. But yeah, so getting back to the charts before we close. Again, we got this order block here. We got a volume imbalance. We got reasons to believe the price may want to continue to go higher. So we're going to continue to trust that until proven otherwise. Bonds are supporting that. Yields are supporting that. Right? Yields are dropping, which will pull DXY lower. That justifies potentially continued lower DXY, aside from the potential potential higher interest for the indices. And so dig back into the three of these. That's an order block. So yeah, unless this low breaks, I will remain bullish on the Dow. Unless this low is completely violated, preferably this low is violated, maybe staying below this, I'm going to stay bullish, favoring bullish. And then obviously if this low breaks, I don't want to see that as well, because we think of our 3 PD arrays. Volume imbalance, that's 1. Order block, midpoint, 2. Breaking below a swing low, that's 3. So that disrespects my ability to trust that price will continue to be bullish if that area is violated, if all 3 of those together is violated in conjunction with what we like to look at for validation and invalidation. Okay, so again, I hope all this stuff made sense today. We've discussed a lot of stuff, as we usually do. I tried to get these to be less than an hour, but I mean, there's just so many things to point out and try to make sure that you guys don't overlook or miss. But yeah, Tony, congratulations, bro. I'm very grateful to hear that you had a great week last week. I'm grateful to see that you've been hopping on these calls and letting me know that you've made some progress. So I couldn't be more grateful. That's why I do this. I don't do this just to hear myself talk. Okay, I do this to try to impact and give as much value as I can that's applicable. And I'm grateful that it has helped you in some small way. But yeah, with that being said, you guys, thanks as always. I hope you guys are having a wonderful holiday season. Don't forget that it's NFP week, NFP protocol, just for a reminder. NFP, FOMC, any of those super crazy dramatic news events alongside the holidays are generally either you don't trade. If you must trade, you take 1 trade. If you take 2 losses in the week of those events taking place, you stop for the week to cut any risk of total ruin. If you take a loss, you have to drop your risk by half. Your risk should already be cut by half going into a week like this. You don't risk normal percentage because it's just not worth it. There's too much landmines. You're not gonna want to risk, even though you'll see somebody posting they made this, they made that, they did this, they did that, and blah blah blah. That doesn't mean that they're doing that all the time. And if you look at their statistics, most of the time they probably get their ass handed to them when they try to engage in those types of environments. Some do well, some don't. But especially for new traders, you want to watch out for the landmines. What I mentioned here is one of those landmines, a couple of those landmines. But yeah, so with that being said, I think I covered everything I wanted to cover today. Again, if you guys have any questions, let me know. If you have any friends that you think could value or get value from this type of content, definitely share the page, like the video. And again, if you have any questions ever, let me know in the comments, and I will be happy to make a video catering to whatever it is that you guys have issues with. Because, again, these videos are for you. They're not just for me to hear myself talk, right? So yeah, guys, with that being said, God bless. Thanks again for your time. It's much appreciated. Thank you for your support. And I will see y'all on the next one.